Hey guys, how's it going? It's Andy from Magoo Investing. Happy Monday. We finally made it to the last week of the year, and I'm expecting a very interesting week when it comes to overall volatility. We just had the stimulus bill that was finally passed, and then I'm expecting to see a lot of maybe some tax losses. People are cutting losses on some stocks that didn't do as well, try to make their tax bill look better going into the end of the year. Today, I want to talk about a stock that's been skyrocketing for the past couple of months, and this has been a stock that I have not talked very positively about in the past. I think the two times that I've talked about it in the past 2 years are probably two of my most disliked videos because I had very strong opinions about the company. But a lot has changed about that. So I'm going to be talking about why it's been skyrocketing the past couple months, talk about the power of Wall Street bets, and how it's played an important role in pushing a lot of stocks up in the past couple months. And then I'm going to finish the video making a bull and a bear case for GameStop. And then you guys are going to have to come up with your own opinions for how you feel about the future of GameStop, ticker symbol GME. So before we get started, I do have to say that I'm not a licensed financial advisor, and this is not financial advice. Anything you hear in this video is just me giving my own opinions on the stock market, and you need to do your own research before making any investment decisions. Also, if you've been enjoying these videos, I really appreciate it if you hit that like and subscribe button, as it would help my channel out a lot. So when we first start talking about GameStop, I want to first talk about the history of the company for the past couple years, at least the stock. So here I'm going to put up the 5-year chart. And as you can see, it's pretty effective at showing the problems that GameStop has been having for the past 5 years at this point. For the majority of the past 5 years, the stock has been cratering, and this comes mainly off of the struggles with this company as being a physical retailer and the switch that we've been seeing to digital transactions when it comes to video games. And so here's a graphic that I found that shows the total amount of spending on video games over the past couple years. And so this data only goes back to 2018, so I'm assuming that, especially in 2021, we've seen this huge disconnect between retail and video games with the pandemic, and I'm expecting this number to be much larger than what we actually see from 2018. And so the company's been struggling for a long time, and back in 2019 is when I first start to identify GameStop as being this company that's really struggling. They have poor earnings, and as a result, they decide to finally cut their dividend. Anytime a company completely eliminates their dividend, the stock market usually sells it off aggressively. And as a result, the stock shot down 30% because of that news. That's why if you go on Robinhood right now and look at GameStop, it says it has a 10% dividend because this is what the payout ratio or what the yield was before they cut that dividend as a result of the stock price cratering for such a long time. As a result of that move, the company expects to save $160 million every year in cash. So that's a positive thing. So now I want to talk about some of the reasoning behind why the stock has recovered in the past couple months. And so over the past couple years, the only person or well-known investor that I've heard that has been very bullish on the future of GameStop has been Michael Burry from The Big Short. Every couple months it would be released that he bought more shares, and that would push the stock up a decent amount. There was also a time where he sent a letter to GameStop management asking the company to continue its share buyback program. This was back when the stock was sitting at $4, and if the company actually did this, that would have been an incredible move considering now it's up above 20. And so anytime Michael Burry came out with a report or maybe an open letter to management, the stock price would shoot up like 20%. Go to present day, and we've been seeing a lot of similar things with news reports. Anytime a news story comes out that looks positive about GameStop, the momentum pushes it up so significantly, it's usually like a 20% move. So there have been 3 news stories in the past couple of months that have really pushed the stock up from looking like a company that could declare bankruptcy in the next couple of years to a stock that has recovered significantly and has an incredible amount of momentum behind it. So the first one comes back in September when Chewy founder, which is ticker symbol CHWY, the Chewy co-founder Ryan Cohen announces that he bought a 9.9% stake in GameStop, and he wants to, quote, compete with Amazon. And so this shoots up the stock price almost 30% as expectations are either that he's going to be making sweeping changes to the company or there's going to be a takeover eventually. There have been some discussions about the price point that he would have to buy the company based off of the share price. But either way, the investors like the idea of it because it means changes to the company, and the way things have been going, you really need changes. Just a couple weeks later in October, GameStop and Microsoft announced a multi-year partnership, and I'm still kind of baffled to why Microsoft really did this. So in the deal, GameStop will use Microsoft's tech devices and software in their stores, and will be pushing additional Xbox products. In exchange, GameStop will get a percentage of all digital sales from consoles bought at the physical GameStop locations. And so this is huge because, as I mentioned, the switch that we've been seeing in the gaming market has been the switch to digital transactions, and this has really suffocated GameStop because this is not a means that they're able to sell their products. And so while we don't know exactly what the numbers of this deal are, I'm going to put that graphic back up from 2018. This is a huge deal for GameStop. And so this was one of the reasons why the stock price shot up significantly. And then the most recent news was just this past week as Ryan Cohen upped his stake to 13%, and then GameStop shot up 30% from that news. I want to talk about something that has been pushing GameStop up a pretty good amount in the past couple months. And it is, yes, the positivity from the news, but one of the most interesting parts of investing in the stock market in 2020 has been the influence of Wall Street Bets. And so the Wall Street Bets, or WSB, is a subreddit that I've been following for a couple years now as a lurker, just because I do enjoy investing in the stock market, and I like seeing people that take maybe more risky positions and have huge payouts. So the idea of Wall Street Bets is that most people are taking huge gambles on buying options with very short expiration dates, way out of the money, to try to get huge profits. And so it's very common to see people posting how they've lost most of their account in just a couple trades, or it's common to see like this guy that made more than 1,000% gain in a single year. And then you have the other group of people on Wall Street Bets, which includes myself, called Theta Gang. The idea behind Theta Gang is that you're selling the options to these people that are willing to pay, ridiculous premiums for pretty much worthless options. And so someone like myself, I love the wheel strategy, and the reason behind it is I'm able to pocket premiums reliably, and I'm not going to have the 1,000% increase in my portfolio in a single year, but I'm not going to blow up my account. So those are the two people that are kind of competing for profits on Wall Street Bets. But this is a subreddit that commonly rallies behind very volatile stocks. And I'm going to be talking about more of these stocks later on this week, but GameStop has been one of the top dogs recently. I found this website that categorizes each post made on Wall Street Bets into bullish or bearish sentiment based off of the words that they use, and then ranks them by popularity. And here's the graphic for what that looks like right now. And as you can see, Wall Street Bets is a very bullish group of people. Wall Street Bets is unified around the goal of waiting out the short sellers on GameStop currently. Shorting the stock means that you borrow the shares of a company from your broker with the expectation that you'll pay them back in the future with the same shares of that company, plus a little bit of interest. And so the broker just wants the shares back eventually. It doesn't matter what price you give it back to them at. The whole point is you want to borrow the shares from your broker, sell them for cash, and then eventually buy them back at a later date at a lower price, and you're able to keep the difference in those two prices. But the idea is that you can't hold on to these shares forever, because it is the expectation that you're going to have to give them back. You're paying extra money to your broker for owning these shares, and if it's going the wrong direction, you're not going to hold this forever. And so this is a very important distinction between buying puts and shorting a stock. Say I buy a $15 put on GameStop and the stock tanks down to $10. That put means that I'm able to sell it to someone for $15 instead of the $10 that it's available on the overall market. But the distinction between the two of them is that if, say, GameStop stays high, I don't have to sell at $15 if I don't want to. It wouldn't make sense for me to sell my shares below the current market price. And so the distinction is, with a short seller, you're required to buy those shares back eventually, whereas if the stock continues to go up and I bought my put, I can just let it expire worthless and nothing happens. And so the result of this is that you're going to have to close out your position and buy those shares back. And if a lot of people do that at a single time, it results in a short squeeze, which is what the people on Wall Street Bets are trying to wait for at this point. So usually, just an example would be person A goes out to close out their position, has to buy the shares back. That stock gets pushed up in price because the buying pressure increases. Person B sees that they're losing out on more money and does the same thing. And it's usually a rush to try to get out of your position as the stock price increases rapidly. And normally we see like a 20, 30, 40% move, because depending on how big the short interest is on a stock, that can be a very aggressive move. And so as you can see right now, the short interest on GameStop is pretty high. And it's been that way for a long time, meaning that a short squeeze is likely going to happen eventually as the stock price continues to go up. And so we've seen a couple of short squeezes this year, the most famous being with Tesla. Tesla was one of the most shorted stocks of all time, and this year with its meteoric rise, being up over 600% at this point, Tesla short sellers have lost more money than the entire airline industry, which is crazy to think about. So it's going to be very interesting to watch. I do have a position on GameStop right now, and I will share that in my video this week talking about my current portfolio. But now I want to make a bull and a bear case for GameStop, because I think it's important to hear both sides of the argument. I'm going to start with the bull case because I think that's what most people want to hear. And the biggest thing for the short term has to do with momentum. This is a stock that's been on a tear, and a short squeeze is looking more and more likely the higher the price increases over time. Given that potential of a short squeeze, the upside potential for the short term is crazy. I've seen some people saying that the upside is like $40. I've been seeing that sometimes the upside is $60. And so there's a lot of positive for a short term potential. Also, especially since we're getting towards the end of the year, I think it's pretty likely that we're going to see this happen potentially by the end of the week, as some people that are shorting the stock may try to close out their positions to take the tax loss, as that is a very interesting strategy that people are trying to minimize their tax bill. And for a stock like GameStop that has been going up for the past couple months, there's probably a lot of people that are sitting on some huge losses there. Another bull case comes from the history of GameStop. Here's a graphic that overlays the release of each of the video game consoles over the past decade plus. Anytime that a major console has been released, the stock price has shot up. And now that we've recently had the release of the new Xbox and the PS5, it's possible that we're going to see a very similar thing. And then the final bull case that I can think of is that Wall Street Bets is a powerful group, even though many people don't really want to acknowledge it. They all trade in the same direction, and even though it's not a massive amount of money that each person is trading with, it's the sheer number of people and the fact that they're all trading in the same direction. When I say that the trend is your friend, the direction of people trading is also a trend that you need to take advantage of and kind of follow. And so since all these people are very bullish on GameStop, that is a major force. It is kind of like the equivalent of a mutual fund being bullish on a stock. Put all the money together, it might not reach the same amount of money for each transaction that we see with a mutual fund, but it is a huge amount of money. It's all going in the same direction. So next I want to talk about the bear cases. And the first and main one is that GameStop is still in a really tough spot. The news from Ryan Cohen wanting to compete with Amazon is a really cute idea, but I don't see it as being very close to being an actual thing at this point. They still have over 5,500 locations, and that's way too much considering the physical retailers are really struggling. Digital is the future, and that graphic that I showed about sales from digital meaning that GameStop is getting less and less of each of the actual video game sales in this industry that's going to explode with the recent release of these new generation consoles. And while the Xbox deal sounds great, I don't think it's going to be as great as maybe some people kind of expect it to be. It is sure going to be a positive for the company, but we really don't know the numbers yet, and I don't think it's going to be enough to save the company. Xbox was lagging in the last console cycle, and here's how console sales have been looking in the past couple years, with Xbox really lagging behind Nintendo and Sony in the last generation. So we don't know the numbers for the next generation Xbox, but it's going to be interesting to see how it looks, because that deal with Xbox sounds great, but we really don't know the numbers behind it. And then finally, I don't like the management group when it comes to GameStop. It's been a company that's never really been innovative. They had the opportunity to buy Twitch, the streaming service, but they backed out of it and Amazon ended up buying it. And they're going to have to reinvent themselves if they want to survive. Ryan Cohen makes that look possible with his track record with e-commerce with Chewy, but it's still a huge challenge and there's a lot of hurdles to go through and probably a lot of growing pains to make this a successful long-term investment. So overall, there's some bullish cases or some bearish cases. For the short term, I'm pretty bullish. Long term, decently bearish. And I will talk about the position that I took this morning on GameStop. It's going to be a very short position. It's going to expire in 3 days. But yeah, I thought this was an interesting topic. I wanted to talk about the power of Wall Street Bets, talk about GameStop, the examples that we've seen with the momentum being pushed by Wall Street Bets with an example like Tesla and the short sellers, because I think this was a very interesting narrative, and I'm very curious to see what's going to happen to GameStop in the upcoming months, maybe as the momentum finally slows down. So thanks for watching. I appreciate all the support, and I will see you in the next video.